owning a home. For so many of us, it's the ultimate dream. But let's be real, the path to getting there, all the finance stuff, it can feel like you're trying to navigate a dense, confusing jungle. Well, today we're handing you the map. We're going to make sense of it all together.
So if you've ever felt your head spin hearing words like tranches or disbursements or tripartite agreements, trust me, you are not alone. We're going to cut right through all that jargon and break down the different kinds of housing loans, one simple step at a time.
All right, let's dive right in. We're going to start with maybe the most ambitious path, building your own dream home completely from scratch. This one's for all the visionaries out there, the ones who want to get every single detail just right.
Okay, so picture this. You found the perfect spot. Maybe it's a piece of land you're about to buy, or maybe it's a family plot that's been passed down to you. The big question is, how do you actually pay for the construction? Well, it turns out there are a couple of really great options here.
First up, you've got the all-in-one package. This is called the Plot Plus Construction Loan. It's absolutely perfect if you're starting from square one. You don't even have the land yet. What it does is cover both buying the land and the cost of building, and the money is released in stages as you go.
So here's how that works. It's a two-phase process. In phase one, the bank gives you the money to buy the plot. Boom, the land is yours. Then phase two kicks in. As the construction gets going, the bank releases the rest of the loan in pieces, or what they call tranches, every time you hit a major building milestone. It's kind of like a built-in progress report for the bank, which makes a lot of sense.
But what if you already have the land? Well, that's where this loan comes in. This one's a lot more straightforward because it's only for the construction costs. The bank provides the funds, again, usually in those tranches we talked about, so you can build your new home on the property you already own.
Okay, let's switch gears and talk about the path that most home buyers actually take, buying a home that someone else has already built. This is probably the most common stop on the whole home ownership journey.
Now, even in this category, you've really got two main choices. You can either buy a home that's completely finished and ready for you to move into, or you can buy a property from a developer while it's still being built, and each one has a loan that's tailor-made for it.
First, the ready-to-occupy home. This is the simplest deal of them all. You find the house, you get approved for the loan, and then the bank pays the seller the full amount in one single payment. It's clean, it's fast, and you get the keys in your hand right away.
But what happens if you're buying into a new development, something that's not even finished yet? Well, this loan is structured a bit differently. Just like a construction loan, the bank pays the developer in stages as the building project moves along, from laying the foundation all the way to the final touches.
So, what's the bottom line here? It really comes down to process and risk. With a ready home, you're looking at one payment, a standard agreement, and generally lower risk. But with an under-construction property, you're dealing with those payments in tranches, a higher chance of project delays, and a very important piece of paperwork.
And that special document is called a tripartite agreement. Now, I know the name sounds super complicated, but its purpose is actually pretty simple. It's all about creating clarity and security for everyone involved, especially for the lender. So, what is it exactly? Well, to put it simply, it's a legal contract that brings the three key players to the table. That's you, the developer, and the bank. It clearly lays out the developer's responsibilities and, crucially, it protects the bank's investment in a property that, for now, might just be a blueprint.
And what does this agreement actually do for you? Well, it holds the developer accountable. It guarantees that all the important property documents will be transferred to you correctly once the place is finished. And here's a really key detail. It even includes a clause to make sure the bank gets its money back if, for whatever reason, you have to cancel the purchase. It's all about lowering the risk when you've got so many moving parts.
Okay, so you've built or bought your home. You're in. But guess what? The journey doesn't just stop there. Our lives change, right? Our families grow, and our homes often need to adapt and grow right along with us.
And this is where house improvement or extension loans are fantastic. Maybe you suddenly need a dedicated home office or another bedroom for a new family member, or you just want a modern kitchen. Especially since COVID, with so many people working and learning from home, these loans have become incredibly popular for upgrading our living spaces.
And this really gets to a powerful idea. Your home isn't just a place to live, it's a dynamic financial asset. Over time, as its value goes up, you're actually building wealth. It becomes this amazing resource you can tap into to help you achieve all sorts of other life goals.
And this is where something like a balance transfer or a top-up loan can be an absolute game changer. Just imagine your property's value has shot up.
You can essentially refinance with a new lender who pays off your old loan, and then, based on that new, higher value, gives you additional cash. This top-up is super flexible. You can use it for those home improvements, a child's wedding, education, or even to start a business.
So as we've seen, it doesn't matter if you're laying the very first brick, turning the key in a brand new door, or expanding the space you already love, there is a financial tool out there designed to help you get there. The path becomes so much clearer once you know which loan is the right fit for you. And that leaves us with one final thought to chew on. Our homes are evolving faster than ever. They're not just where we live anymore. They're our offices, our schools, our gyms. So what new, flexible financial products are we going to need to support the homes of the future? Now that is something worth thinking about.